If you're like many people and you own some assets, you've probably insured those assets. For instance, if you own a house, you probably have homeowners insurance. If you own a car, you probably have car insurance. If you have a family, of course, yourself, you probably have health insurance, right? And so what we do is we try to protect our assets by all means, so that if something happens, the insurance company will indemnify us. And by indemnify, I mean that they'll be able to compensate us for our loss, right? And so because we know that our assets are important, we take care of them, right? And if you ask a lot of people what's your biggest asset, they'll tell you their house. Well, I like to differ that actually your house is not your biggest asset. The biggest asset is yourself as a parent, household head. You're the biggest asset. And the reason is this: you're the one who takes care of the premiums for the insurance that you pay for your health insurance. You provide shelter for your family. You provide food for your family. You pay the bills for your family. You take care of your family. And if something happened to you, let me ask you a question. What would happen if something happened to you? Who's going to pay those bills? Who's going to pay those premiums? And what I mean by something happening to you, of course, you might become disabled. Let's say you died. And I know we don't like to talk about death. I know. I don't want to be all, morbid here and whatnot. But there's two things in life that are, at least they say there's two things in life that are unavoidable, right? They're certain. That's death and taxes. They'll happen. You can't avoid them. They will happen to 100% of us. They just will. And so when the time comes for you, you don't know when that will be. What's going to happen to your family? Right? What's going to happen to your family? Have you thought about that? I was 7 years old when my father died. And my mother became a single mother. She raised my sister and I by herself for several years. And then 10 years later, I was 17 years old when she also died. My dad was 32 years old when he passed away. My mother was 41 years old when she passed away. I was lucky that my mother had life insurance. She had enough wisdom to realize that she needed life insurance. And so upon her passing, the insurance company paid the life insurance. That's the money that I used to buy an air ticket to come to the United States, and also pay for my first and I believe my second semester of college. And the rest is history. I ended up doing engineering, graduated, of course, got a great job, six figures, whatever. But anyway, had my own family, fast forward, and one of the first things I did when I got married and had my two kids, even before I had my two kids, is that I bought life insurance. And ideally, you want your life insurance to be 10 times what you make, because I realized that, like, look, as a breadwinner, as the main provider in our household, if something happened to me, who's going to pay the mortgage? Who's going to pay the bills? What's going to happen to my family? What's going to happen to my two kids? And what's going to happen to my wife, right? And so I ensured that should anything happen to me, that my family is taken care of. Why? Because unlike other people who think their house is their biggest asset, I am the biggest asset in our home. My wife is one of the biggest assets. We are the biggest assets in our home. If anything happened to both of us, it would really have an impact on our family. And that's the reason why we have life insurance on both our lives. Should anything happen to us, that our kids are going to be taken care of, right? It doesn't matter what happens, the kids are guaranteed million. And see, it's not life insurance. Now, there's two kinds of life insurance, right? There's two kinds of life insurance. Let me get back to that. So there's whole life and there's term. Whole life is where you're insured for the rest of your life from now until you die, right? I don't know why a person would do that, but I think that is just a waste of money. It's a waste of money to have whole life. You just want term. When you buy your car insurance, you don't buy whole car insurance, meaning the life of your car. You buy term, 6 months, a year, and whatnot. It's for a period of time. That's what you want to do. And so I'm gonna tell you uh, what I do, right? And hopefully you can learn something, or I can learn something from what you do. And on this channel, basically, the best advice I know how to give is what I do myself. I don't like regurgitating stuff or telling other people's material or telling other people's stuff. What I know is the best thing I can share, right? And what I've experienced, what I know is what I would try to share. And if you see any value in that, hopefully you can implement that, because at least you know somebody who's doing that, not just thinking, okay, this advice I'm getting, is it even real? Do people even do this stuff? At least I can back it up and say, I do this, we do this. And so where I was at is, well, the reason we do term 25 years, I figured, you know what, by the time I'm 25, by the time my kids are 25, or one is 25, the other one is going to be younger, of course, than that, for the both of them, I would like to guarantee $1 million, right? For my family. If something happens to me, guaranteed $1 million. Now, this stuff doesn't cost anything. This stuff costs like $50 a month, right? And so even if you invested $50 a month for the next, what is that? I don't know how many months. Let's do 12 months multiplied by 10. That's 120 months, right? Plus another 60 months. 120 plus 60. That's 180 months. Let's say even if you saved $50 for 180 months, it's not gonna get you to $1 million. It might get you like $40,000 or $36,000, somewhere there, but that's not enough, right? But if you bought life insurance for $50 a month, you can buy life insurance for, depending on your health, of course, and I'm assuming you're healthy, you're doing the right things, that way you're able to protect your family. You can buy insurance for $1 million that can cover your family for 25 years at least. And the plan is, during that time, what you want to do is, because then the question you should be asking me is, what happens after 25 years? Well, after 25, the risk is zero. You know why the risk is zero? Because you would have done everything in your power to ensure that when they're 25, they have $1 million anyway. How are you going to do that? What we've done for my family is, at the moment they were born, okay, you start setting aside at least $500, okay, in the in custodial accounts, and what we call custodial. I'll get into more details as far as custodial accounts. Custodial accounts is an account that you can open with your brokerage firm, be it Ameritrade, Schwab, and of course Ameritrade was bought by Schwab, or Fidelity, right? Any of those should have those accounts. You open that account, you start setting money aside. You can save this money maybe through a 529 or whatever it is. I don't like those kind of accounts that are restrictive. I like custodial accounts to where when the child is 18, between 18 and 25, you can surrender that account to them, right? You can surrender that account to them, and now it's their money. And so if you just plan well and set aside $500 between two people, between two kids, however many kids you have, by the time they're 25, you can say they will have $1 million, right? Depending on the market fluctuating between 10 to 15% during that time. If you do well at 12%, 11%, but the number that we've used in our case to get us to $1 million, about 12%. The market has returned about 10%. So if it does well, depending on what the market does, even if they didn't do well, that's a 10%. That's $750,000. If it does well at 12%, it will get us to $1 million. So you've guaranteed that by the time the kids are 25, they will have $1 million. So if anything happens to you before then, let's say in the next 10 years something happens, they still get $1 million. Plus whatever it is that you've saved. It might not be $1 million yet, but as the risk as you're getting to that 25 as the risk, because right now what you're covering is the risk that you have right now, because we've not accumulated $1 million yet, right? You just started. It doesn't matter whether it's today, tomorrow, for the next 25 years. Should anything happen to you, your family gets $1 million. And if something happens to you after 25, your family still has $1 million, because now you've personally insured yourself, self-insured. Now you're self-insured because your resources, your assets are able to take care of the risk that you had before, right? And that's why it's important. This video really is about, the takeaway is, we must buy life insurance. That shouldn't be debatable. It should be part of your personal finance. It should be part of just something before you pay anybody else. If you are married, you don't have to be married, but if you have people that depend on you, if you have a family, life insurance should be part of the equation. Before you pay off any debt, before you do whatever it is, you must have life insurance. And the stuff is cheap, right? $50 a month, $40 or $30. It is cheap. It is nothing. It costs almost nothing to protect your family. I just think about it. $50, $1 million, 60, whatever, 40. That's nothing when you really think about it. It's $2 a day. You can afford $2 a day. You should be able to afford $2 a day. And so that's the most important thing. Buying life insurance, insuring our lives, is the most important thing we can do for our family. I can't encourage you enough. I can't reiterate this enough. It helped me when it mattered, and I believe it will help you when it does matter. What you don't want is when you're gone and you leave behind a mess, right? Who's gonna take care of your kids? With $1 million, they should pay. If you have debt on your mortgage, they should be able to pay off the mortgage. Somebody can invest the money that's left, if the kids are still young, into a good mutual fund, a good index fund. The money keeps on growing. It can still produce income. At 6%, that's $60,000 a year on $1 million. $60,000 a year. It might not be the six figures that you used to make, but this is $6,000 a year. That $60,000 a year that is able, $5,000 a month, that is able to help your family when you're gone. They can still maintain the same lifestyle. Let your family miss you. They will miss your presence, but they shouldn't miss your provision. That's the goal of insurance, right? They will miss your presence. They will miss you being there to hug them, to hold them. But surely you don't want their lifestyle also to suffer because of your absence. You can still maintain the lifestyle, at least a modicum of a decent life, right? Some degree of what's the word? Some degree of normalcy, so to say. Yes, you're gone, but come on, they should continue to be able to have ice cream. They should continue to be able to, take a trip or two. Whatever life that you had for them should not change drastically. That's why your insurance needs to be 10 times whatever you make, right? It should be at least 10 times. Back then it was, that's what it was. And as your income goes up, they need you want up that insurance that you have, right? If you have six figures, if it's $100,000, you make sure it's $1 million. If you move to 150, 1.5, whatever that amount is, you want the rule of thumb. It doesn't have to be. It's not a must that you do it this way, but the rule of thumb is you want 10 times whatever your income is to be able to sustain the same lifestyle that your kids or your family is used to. It might not be the same, but it's close to the lifestyle they had when you're still around. So anyway, guys, if you do it differently, please leave a comment below. Let's discuss it. Let me see what your thoughts are. And if you have not yet subscribed to this channel, go ahead and do that, and also turn on the bell, so the notification, so that when I upload videos, you are notified. And anyway, guys, thank you for your time. Thank you for watching this video to the end. I hope you learned something. We'll see you in the next video. Thanks. Bye.